All right. There we go. First contract, second contract. I'll do something like that right there. Come on. Do this. Okay. First contract. Hey, if this is your first time watching today's video or any other videos, guys, go ahead, join the team, sub, hit the subscribe button, and hit that little bell icon. That's the post notification icon, or however you want to call it here on YouTube, that ensures that you never miss one of the videos here. If you've already subscribed to the channel, I appreciate it, guys. You know that I say this each and every day. I thank myself for subscribing to the channel. What basically I do, I'm a live day trader pretty much. I trade the E-mini S&P futures each and every day. I record my trading sessions. I post it here on my channel here. Guys, it's valuable. It's good content, good information. So go ahead, subscribe and join the team today and continue watching today's video because today's topic is a good one. All right. Hey guys, welcome back to the channel. This is Future Trading with Mike, and once again I am here with another video. We're looking at the E-mini S&P 500 futures. This is my 12 range chart, guys. Welcome you guys back. And let's see here. Yesterday in the market, what we had going on, it's kind of kept trading sideways. We've been trading sideways since like the 28th of December, guys. So the earlier part of this week, and which I knew was going to happen because of the holiday prior to, and the market just traded sideways. Now, if we look at volume right now, yeah, volume was really low. Yeah, volume is really low, and it's almost 10:15 right now. So volume's low. Of course, we got New Year tomorrow. Market is open today, but I don't expect much to happen, guys. What I wanted to show you guys was a trade that I took actually yesterday evening, and I want to talk about, today in this video here, basically how to start off your new year. If you're a beginner trader, how do you start off day trading and as a beginner in the new year, 2022? We're going to bring that in tomorrow. Today is New Year's Eve. Today is the 31st of December, guys, last day of the year. So if you are a beginner trader, someone new that's looking to start your trading venture, what are some things that you can actually, do to actually, possibly start faring well in the market or profiting or, become successful, whatever the case is. First and foremost, like I always say, learn the fundamentals of trading. Learn that, do your homework, come up with a trading plan, whatever the case is. But to me, the most important part, or the most one thing that I found in my trading journey that worked time and time again, and you have to learn one of the key things of trading: who's driving the market, who's pushing and pulling the market, why does the market move? Who moves the market? We as retail traders don't push and pull the market. We don't have that kind of capital to be able to inject into the market and cause big moves, or just cause it to move in general. So it's the institutions, they're the big players in the market, the big, investment companies that where people who have money basically turn to them and to invest their money into the market, whatever the case is. So it's the institutions that drive the market, whatever the case is. And we as retail traders, we have to trade like them. We're just like trying to follow the breadcrumbs and follow that path that they're taking pretty much. And once you learn that golden path, I'd say, we learn how they trade and trade like them, then you will be successful in the market. So, those key areas in the market that where you can look for, and I call them supply and demand levels or zones, whatever you want to call it. And there's nothing wrong with trading support and resistance levels, because you can actually do well with those. Because sometimes price will hit a support area of a swing or a resistance area within of a swing, and just it will pretty much bounce and move in that direction, whatever the case is. Like right here, where price came down, formed the swing to the downside, price pulls back to that area, right? Well, what does it pull back to? It pulls back to that area of resistance, which is this swing right here, and then it pushes back lower, rejects here, pushes lower. It doesn't come all the way back up into the area or pulls all the way back to the area of supply right here. So yesterday evening, I'm gonna tell you what I did. I followed price action, look at the market structure. Yes, we're moving sideways here. And I noticed, here's an area right here of demand right here, pretty much. The market pushed up here. Let me move this out the way so you guys can see. Um, Pushed up here, pulled back, and then it started taking off heavy to the upside with a lot of buying. So the market comes back down. Now, you've got to make sure when you're trading that the market comes back down to that, almost to tick to that zone, because you know the institutions are the ones that are like, if they come back down to this area here, okay, they're looking to drive the market up, they pull the market back, okay. If the market does not come back down to that area where all that initial buying took place at, pretty much by the institutions, there was heavy buying in this area. If they don't come back to the exact point, pretty much to the tick almost, where they, initiated their entries of buying, then what's going to end up happening is at some point they're going to start doing profit taking, okay? And that's what happened here. The market pushed up and pulled back. They didn't come back to this zone, which is this rectangular area here. Let me take this box here off, right here. So the area right here, they didn't come back to it. You see, they were shy of that area. That area is formed pretty much by the low of that red candle right there, the body of that candle, the low of that candle to the top or the opening of the body of that candle right there. And because they didn't come back to that area, that kind of told me that when I saw this happen right here, the market pushed up and came back to this zone or this area right here, and it didn't come all the way into that zone, that at some point that the institutions are going to be looking to do profit taking. So instead of pulling back and coming into that zone and then putting on more positions, then which at that point came back here to be a demand zone to where they're looking to put on more positions and push the market, drive the market higher. They didn't do that. So the market kind of came down, didn't hit that zone. It pushed back up, kind of zigzagging, back to the upside, stair stepping to the upside. And then you see the market made a high here, right? Taking out this high right here. Now this was an area of demand right here. And they took that area out. So not demand, supply, guys. And so what happened is when they turned the market back around, the market turned back around and started rallying back down to the downside. What would happen here? They eventually came down to that area, okay, and started pushing through that area. But I had already noticed prior to that they didn't come to that zone, that area there. They didn't come into that zone, that exact zone right there. So when I saw price come back down here, when and off the first time where they failed to drive the market into that zone to pick up more orders. When the price pushed up and came back to that area, I knew that, all right, they're going to be doing profit taking, so this could be an opportunity to sell short. So you see that entry right there. I got in when the market pulled back. Okay, so the market pushed down, pulled back, and then it pushed lower, right? And then the market pulls back to a little area of supply right here. Okay, this is where a lot of selling took place. Some selling took place. Red candle, red candle, red candle. So that was pretty significant selling. So the market actually came back to the area of supply right there, and that was a good opportunity to go short. When I saw that, I went short, guys. At the close of that candle right there, I believe it was actually the close of the second candle right here, I went short. The market pushed down. It pushed down, and I took a good ride. I was in, I think, with 2 contracts. One contract, I exited the market right here, and I let the second one be a runner, and it burst right through this area right here after the market opened up yesterday evening, and it kept, it stopped right here. So now let's see here. Yeah, so it broke to that area right there. So that was a nice trade for me last night. That trade was probably the best trade I've taken, probably in the the best solid 1 entry trade that I've taken in the last probably 2 weeks or so, whatever the case is. So that was a solid entry right here. And then right here, I went for a long entry about right after the market opened up, pretty much. Right at the opening. And the reason why I did that was because I noticed price when it pushed down here. Okay, all right. So when my computer froze up, guys, give me a second. All right, not sure what's going on with my charts. Okay, there it goes. Yeah, a little glitch there. The market pushed down here. Okay, now we got this area of supply right here, right? Got an area of supply. The market pulls back. It does not come back into that area. It actually stops right here at resistance, okay? When I saw this, and at that point, I said, okay, so, yep, this could be an entry for a short. but we got demand right here at the bottom, right? Okay, got demand right here at the bottom. All right, so price doesn't, it rejects resistance. It does not tap back into the area of um, supply here at the bottom. I mean, demand here at the bottom. I'm so sorry, guys. Demand here at the bottom. And when it doesn't do that, but I see it reject resistance and not come back to the area of supply. So basically what happens is price pushes lower, forms an area of demand, pushes up hard to the upside strong, right? Boom, 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 green candles, right? So there's a lot of buying, okay? Strong buying, okay, coming out of this area right here. So this is an area of demand now. That's why I have it marked off right here, little rectangular box. This right here is an area of supply, lots of selling. So price pulls back to it, retraces back to it. It doesn't come back into the area of supply of the zone right here. It comes back to the resistance level right here, right? All right, so it rejects out of that area, okay? Doesn't come back down to the areas of demand. So when I saw price doing this right here, it already made its first attempt pulling back on a retracement back to this area here, but failing to hit the pull back into the area of supply off the first push up. I said, okay, this is probably an area where the market, this is an opportunity the market is going to be doing some profit taking. The institutions, they're going to be doing, not the market, the institutions are going to be doing some profit taking. So it pushes up again, okay? Then it pulls back. And then when I see price, pull back up here, start breaking through these highs right here, guys, I take a trade to the upside, okay? So I took a trade to the upside, guys. You can see here the blue arrow here. And I knew that price would take this area here out because they're going to be doing profit taking. When the institutions do not come up here, back to the area of supply, and I'll mark that area for you. Okay, we're going to get a rectangle here. All right, the area of supply here. This would be at the height of the last green candle down to the opening body of that candle, okay? All right, that last bullish green candle right there, okay? The height of it to the body of it, okay? The opening of the body, all right? So they didn't, when price turned back around and came back and pushed back up, they stopped right here at resistance. They didn't pull it back into, price did not move back up to the area of to supply. So when I saw that, I said, okay, they're probably gonna do some profit taking here. So I waited for price to kind of zigzag. I pushed up, pulled back, pushed up, and then when I definitely saw that it was rejecting the area of pulling back down to this area of demand, and saw price pushing back up, breaking the highs, starting to break these highs right here. And when it did that, pushed up, I closed this green candle pretty much. I went long, and took price, took the market back up to, I knew it would push higher than this high right here, and I closed my entry right at that high right there pretty much. So that was a pretty decent trade right there. I entered the market, I think it was right here, 47.70, and got out. It was almost 3 points right there. I took it up to, but it actually went higher than that, and I knew it would take this area here out. But the thing was that what was it going to do when it got up to this area right here? So the market got up to that area right there, and it rejected again. It rejected again because the market pushed down here. It pulled back. It actually pulled back to this area right here to the tick, to the area of supply, and this swing right here to the downside. So I took 2 solid entries, guys. It was real good, 2 solid entries. And so what I'm basically trying to say to you guys is that follow the areas, look for areas of supply and demand. I mean, if you're definitely a beginner trader, the probability of if you of being more successful in trading supply and demand zones outweighs any type of other strategy or just strategy you could use. I mean, just wait for price to come back to those areas, look for the rejection, and then take the entry. Now, as I said, if price, say for instance, like right here, price pushed up and pulled back, does not come back almost pretty much to the tick of this zone area right here, which is demand. It does not do that. I'm not saying you can't take a trade off of failure, but what I'm trying to tell you is that from the bigger picture, look for the market at some point to come back down here and break through this area here, because when they push the market up and pulled it back, they did not take the opportunity to actually drive the market all the way back down to the area of demand. And because of that, at some point, I knew they would come back down, do their profit taking, and push the market and drive the market lower. So when I saw the market come down here after, not coming back or moving into the demand zone, when it pushed back up and came back eventually to the low of this swing right here, I said they're getting ready to set up. They're getting ready to, the institutions are getting ready to set up to drive this market even lower. On the pullback, back to supply, to supply right here, waiting for the rejection. The market retraced right here, back to area supply right here. I went short, and I knew that it was going to drive. They were going to drive the market lower. Okay, how low? Didn't know. The question is, well, how do you know where to kind of put your profit target? Say for instance, well, I'm looking for areas below to the left of my chart where the market could possibly um, bounce at, and that's this swing. These swings to the downside. What's below it? If you take the trade, you look to your left, you see that there's a support below it. So you kind of gauge that and use that as a tool to mark your charts to where you can say, hey, the market's going to pause or stop. So start taking profit there, and that's what I do. So how do you start trading as a beginner in the new year, 2022? Exactly what I just said. Supply and demand. If you don't know about a lot about it, which is not, it's not a hidden secret, guys, but it is a great opportunity. It increases the probability of your trading. You become more successful. You get better runs. So your risk to reward is more reward than risk. Trust me. It is better areas of probability to take trades from. Okay. So what's happening right now in the market? The market is just moving sideways. It's definitely just moving sideways right now, and I'm not 100% sure what it's actually going to do because it pulled back here. Okay, it rejected this area here again. So I'm not 100% sure what it's actually going to do. At some point, I would say that it's probably going to. Well, we're in a wedge right now, so I'm not even going to speculate, guys. We're in a wedge. I'm waiting for the market to kind of show its hand. But if the market drives back down, to be honest with you, if it drives back down and it cannot, if it drives back down and comes to this area here, so basically, I'll be looking for the market to do something like this. Let me show you. The market come lower, boom, taps into the zone and pull back, and then when it rejects, it could be here, it could come back up here. It doesn't matter. I'm not sure yet because you got to wait to see price action to see what it's going to do. But if it rejects at some point on the pullback, on the rejection, I'm going short. Okay, and that short probably will be taken to probably this area right here to my first contract or two, whatever the case is. Scaling out of the market, and then what you could do is leave a runner on, and with the possibility of the market moving lower. And that's what I did last night when I took this trade here. Took my trade on. I put my trade on to my first contract, like right here. I left the my last contract running, and the market didn't have any pullback. It blasted through this area right here. Okay, so that's how you do it. That's exactly how you do it. So supply and demand, guys, it's a heavy topic. It's a great tool to use. Trade like the institutions. If you're a beginner, so this is not just for a beginner, but for anybody out there. Whatever strategy you may use. I'm sure that if you're been trading for a while, you definitely know about supply and demand. So I'm just telling you that I'm not saying it's a holy grail of trading, the holy grail or anything. But what I am here to tell you is that if you're going into the new year, I'm telling you, and you really want to really start the year off right and trade the correct way. Wait for supply and demand zones. Wait for the rejection of those zones, guys, and take your opportunity. Okay, I mean that it is what it is. So I don't have much today. I'm not sure what the market is actually going to. Let's see. Um, let's see. Yep, I'm going short. I'm going short, guys. Going short. Let's see. Let's see. Let's see. Let's see. Hmm. Um. Come on. Yeah. Let me go ahead and I'm gonna take a scalp for a point here. Actually, I'm gonna go ahead and scalp right here. Okay, we got filled in the first contract. Come on. Mm, come on. Okay, I got filled there. All right. So, not sure we're moving sideways. I'm looking for price maybe come back down to around this area right here. Let's see something. Yeah. Okay, I'm going short. All right. There we go. First contract, second contract. I'll do something like that right there. Come on. Do this. Okay. First contract. Second contract. See? See what I'm saying? So I knew what price was going to do there. And now what I'm going to show you, these are my trade entries from, it's probably going to show accumulation of trades from what I took last night into today's session here. So today is the 31st. Yeah. Let's see. My last. Okay. Yeah. So what you see here is, I'll show it to you guys. That's 187 ticks in between two days, guys. That's on two trades. You see the 30th and then the 31st. That's from that long that trade here, and then this trade I took back up to the upside, and then these two little trades right here. So, if I just do it, if let me see if it will just show me what the trades I took today. So the last 2 days I did 187 ticks, and just today so far off those two little trades there. Let me make sure that's correct. Yeah, 930. Yeah, this trade here, and then these two trades right here. So that's 39 ticks, almost 40 ticks right there. So those are solid entries, and that's $487.50 just on those couple of trades I took today. So if I couple that with yesterday's trading, with the overnight trading I did in the session, well, I'll show it to you guys. Here it is right here. So $2,337.50 right there. All right, that's from trade I took yesterday, and with including the ones I've taken today so far. So that's the my trading summary. I have nothing to hide there, so there it is. Um, I'm just looking for those areas of supply and demand in the market, guys, and I highly recommend you guys, you know, look for those areas as well. You wait like right here. I knew that price when it came down back to this area of the zone here of demand failed to come down directly into it. Um, Pretty much rejected. And at some point, I knew it would come back down there to it and then break through it because the institutions at that point are going to be doing some profit taking. And I just waited for them to come to the area. pullback on the pullback. I went short, basically back into this level right here. And when I saw that, when I noticed that on my 4 range chart, the rejection, I went short, and that was a nice ride. I mean, I entered the market right here at 72, 47.72, and got out at 47.53. So what was that? Um, Guys, almost that's almost. I'm sorry. I said 47.72 to, yeah, that's almost 20 points right there. So that was a nice run. Nice run. I haven't had a run like that in a while. I'll be honest with you. Okay. So I'm going to take these chart markers off here. Yeah. Okay. So I just wanted to kind of talk about that, guys. I mean, I wish everyone, a happy new year going into the new year. Um, this is basically how to start your trading year off. Going into 2022, you're going to go into a new year. What to look for? Look for those supply and demand zones, guys. And that's pretty much it. That's all I have today, guys. I'm going to wrap this video up. It's about 20-minute video. It's probably one of the shorter videos I've done, but I was able to get in two entries there. I showed you real quick. The market came down to the area where I said it probably would come down to, and that's pretty much it. So if you're trading, be safe in the market. I'm pretty much sure you guys aren't trading today because today's the new year and the volume being so low. But hey, I mean, I'm here to show you that even when the volume's low, you can still trade, which I just showed you. But be careful. If you don't know 100% what you're doing, that trade can come back against you just as quick. Stay safe, guys. I'll see you in the new year coming, Monday. The market volume may be kind of thin still going into next week, so it just depends. But hey, I'm still probably going to drop my videos, whatever the case is. So I'll talk to you guys in the next video, and have a great weekend, and Happy New Year to everyone out there, okay?